Great day. The evolution of what is AI and technology today is absolutely a unprecedented amount of speed, an unprecedented amount of innovation. And today we're going to be going over some of the top stocks that are moving in AI, and also
The evolution of what
we
is AI.
are going to cover what is going to be the earnings for this week. So we just dropped some earnings back in StockMate about a few minutes ago there. Earnings for this week, I think it might even pop up here. There it is. And we got SoFi on Tuesday. We got PayPal. We got Boeing. Those are going to be interesting to watch. Along with Visa, and you got Robinhood reporting on Wednesday after hours. And then you have ARM Holdings, Applied Digital, APLD is on Wednesday after hours. So we're going to be watching there. And then you got Amazon and Apple reporting on Thursday, along with Coinbase and Reddit and MicroStrategy there. And then you got some oil and gas reporting there on Friday. You got ExxonMobil with Chevron, Dominion Energy there. So when it comes to, also you got for data centers, Vertiv, VRT, which is one we've been watching, and we'll keep a close eye there. So looking over in the chat, I see an awesome influx of comments. You guys are tuned in. So great to see you all tonight. Hey, what's going on? Agua, you got Marty is there. Aaron always tunes in right away. I see you, man. Hopefully you're having a good day. And he says, what's up, Stockmates? You know, we had our live session this morning in Stockmate too. This is part of Stockmate here, this earnings, the targets we have in Stockmate along with the community there. If you guys ever want to join us in the live session, some of you guys might not be aware, but we do go live every morning, Monday through Friday. It's the second link in the description below. And we got a special sale there right now for Stockmates. Some of you guys are joining Stockmate just for the free t-shirts. Send it to you anywhere in the world. So here we got some movement happening in the markets. One of the companies we were trading here was TSLL. We were in a position earlier this week. We've ridden quite a dip here. We see a nice recovery of about 15%. But we're going to talk about outside of some crazy after hours, we didn't really see any movement right now. But as far as the overall returns on APLD, you got AMD is up big today, along with Tesla was up big today. And APLD is going to be one reporting earnings this week. So let's take a look at it. I see Boris here. What's going on? Good afternoon there, Boris. So APLD stock, let's take a look at it. So APLD has had some momentum. We've definitely been covering it for a while. Just got off the phone today with Daryl, who I work one-on-one with now. He's part of Stockmate as well. And when I was talking with Daryl, he said that he was able to get into APLD when we started talking about it earlier this year. And he made, I think, $70,000 trading APLD. Now, I haven't had those kinds of returns trading APLD just yet. But we do see some catalysts for why they've surged. They had some big spikes back in 2021, some big push-ups, and then ultimately found a support here at around $2 a share in September 2022. Throughout the very few surges we've seen here, they've been holding that $2 to $3 and now $4 range, and they recently signed some big contracts. So we can head over to our data centers and really take a look here what it looks like. They specialize in building data centers, and the data centers that they construct, it's just kind of a market overview for NVIDIA, for Intel, for Hewlett Packard. They work with Supermicro Computer. Supermicro Computer does the infrastructure on the inside, but they're a construction building company that focuses on building data centers for some of these companies. So you got Supermicro mentioned, you have Dell, Intel, Hewlett Packard, and a few others. So why do we follow them, and what is the reason to keep a close eye on them? Well, I know they got earnings this week for sure, so that's going to be interesting to watch. We were just kind of looking at that a second ago. Their earnings are on When are their earnings? They are on Wednesday after hours. They're reporting their earnings. Now, what we've noticed with the company is that they've recently announced this partnership with CoreWeave. It's a $7 billion potential in total revenue for leases. They're building this data center out here in North Dakota in a cold climate, and apparently to take advantage of that cold temperature, which they oftentimes do. They use liquid cooling. They go point of generation. They try and go near wind turbines or reservoirs or things like that. Marty says, what percentage was the app? What percentage was the stop? I'm not sure which trade you're referring to, but I'd be more than happy to take a look. So APLD's financials, they've came in with a pretty large market cap as of recently, up to about $2.3 billion. Now, if they end up making that $7 billion deal, really stay true to that income from CoreWeave, which is a hyperscaler AI company looking to get more data centers, then we could see APLD continue to grow here. Now, their revenue has been increasing for the most part year over year. They've gone from 2022 here going public. You got or at least their financials, 8 million. Then they got up to 55 million, and then recently up to 165 million. Their balance sheet, their liabilities are a little bit high, up to 1.2 billion, but their total assets are up to about 1.7. Why is that disciplined? Well, oftentimes you're just going to want to identify companies that have more assets than liabilities and not vice versa. That means they have more cash. If there is a call from a bank and they need to pay back money quickly, they can do it without having to file bankruptcy, right? So they're in a good spot. You see them in total liabilities lower than their total assets. Now, the other thing to note about the company, their net profit margins are up about 52%, and the net income doing better, up about 42%. Still a little bit negative, which is to be expected for a company that's constructing data centers. I mean, their liabilities most likely will be a little bit higher because they have a lot of infrastructure, a lot of materials, things like that, and contractors that they're paying to build the data centers. So that's just something to consider. They're about $2 billion market cap, but again, if we see their total assets around $2 billion and they continue to build their contracts, then that $2 billion market cap would be a little crazy to sustain. We might see them push up more. That's kind of what we've kind of looked for here. They did recently pull back from this big high of $15 down to about $19, which was a previous consolidation, previous resistance. They start to recover here up into this level at $11 a share. We see them get up in that $12 range, start to sell back down. So when it comes to APLD, again, data centers, really good market. Financials look pretty good. The institutional holdings that we've seen for APLD is also interesting. We can take a look real quick. Just kind of see how that's looking. If I'm not mistaken, there's been more increased positions. Yeah. So just some indication that institutions are finding this to be a company they want to buy. More of them are buying than they are selling. 25 of them are holding, and you got BlackRock investing, Vanguard, BlackRock, one of the biggest holders there. State Street as well as Oasis, and Goldman Sachs is in there with Morgan Stanley, Charles Schwab. So Schwab is in there. I think what we've seen with the company, again, just right market that they're in. What we're kind of watching here is if they can hold this $10.20 support. They are trying to. If they do, it's about an 8% swing up into this $11 range. In the near term, that's kind of how it looks, and we'd love to see them break up into that $12 range. It'd be about a 20% increase there. And then if they can make it back to previous highs and where their resistance has been over the past few years, we're talking about seeing them maybe get up into that $13 range. Now, they move a lot around earnings, not always in a positive direction. So keep in mind, there's a lot of risk potentially around earnings. Just keep that in mind. When it comes to the growth that we've seen from the company, though, I would imagine that it would be more likely that we see them hold above this $9 price point. It's possible that they sell back down to $9 before continuing up. It's about a 50% margin for profit at that point. But right now, we're just kind of watching, see if that move could take place for something like this, a 10% swing up into that $11.50 range. So we'll be watching there. Beak Wetter there says held PayPal for a while to a crazy level now, and you're considering getting some BBAI. Yeah, I mean, PayPal also is reporting earnings this week, so that's always something to consider. There could be a lot more risk. SoFi is reporting earnings. One thing to note about SoFi that at least I've seen is that their amount of people that pay back their loans they've had a high number of defaults, which may not be good for their earnings, as their revenue has been high, but their net income and liabilities are also pretty high for the company. At least for a software company, you'd imagine they would have more profits. I guess they have mortgage brokers and people like that, but that they do operate with software. It seemed like their margins weren't that good. So if they don't come in with some good margins in the next earnings, I don't know that they'll continue that surge. Now, a lot of people don't like my view on SoFi. They think that I'm bearish on it. It's not that I'm bearish. I just think they have potential, but the problem is that from my perspective, I mean, we could take a look. I don't see them doing anything that's super out of the ordinary. $23 billion market cap. Revenue's been really good for them. The balance sheet, though, their total liabilities are pretty high. And their liabilities are actually rising higher year over year than their assets, which isn't the healthiest. Just something to consider. But overall, PE ratio is fairly low. It's still pretty high, though, at about 50. So we could see how they report earnings, but according to those indicators, possibly a little bit overvalued at the moment. When it comes to APLD, though, we'll be watching this level. I'm going to see if it can hold and potentially make that recovery up into that $13 range. In total, I'd love to see that. But again, a very key level it's at right now at about $10 a share, looking for that push up into $11.50. So APLD is going to be one we'll watch here for the week. I like the data center market, so that's kind of what's going on. What's going on? Uncompromised one, happy to see you here. Also see Aaron says portfolio's down 1% on the day. You say the trading tips that you've received from us have been super helping tremendously. Doubled your portfolio in a month utilizing my guidance. Hey man, I really appreciate that. Thanks for sharing that. Those are the types of things I like to screenshot so that I can see that your hard work is paying off. I can send it back to you. Love it. When it comes to some of the ticker symbols that we also are looking at, TSLA, Uncompromised one says I made about 4% today on TSLA. So the largest loss that we've had of the year actually was on Tesla. Surprise, surprise. We were in it here and we ended up, let me see if I can reveal the position here. Where are we at? Let's see. There we are. We were in it here right before the earnings, and the earnings came in not too bad, but from a financial perspective, not the hottest. They announced they're focusing a lot more on AI, a lot more on data centers. So that was really good in my eyes. But again, they sold down to about $10 a share here on TSLL, which over on Tesla was a sell down of about down to $300 a share from what was $335. So pretty significant sell off. Right, about 10%. And we were down about 12 to 14% over on TSLL. We're going for a 40% or 30% margin for profit. So it was okay. We actually were able to hedge and hold some of that risk. And at one point it was down, I think about 3,500. But we were looking for this recovery, which we did see today and the last day on Friday. So we're now down just about 680 on that position. After holding through some earnings, a little shaky, but still kind of looking for this recovery on Tesla, right? We're looking for it to get up to that $15 range on TSLL. I think it's quite possible. I know the charts look a little crazy here, but that's how it looks in the near term. So again, watching that level at about $15 a share for Tesla, but right now, just trying to get up into this range around $13 a share on TSLL. We'll just be watching it throughout the week. So I'm glad you're able to make that trade too. We wrapped up in our live session this morning. We were trading a few stocks, and Tesla was definitely one of the ones we were watching closely. The other one that is reporting earnings today is MSTR. We're not going to go into it as they sell their own stock in order to buy Bitcoin. It's not always the best spot for investors to be looking at it for that reason. basically your money is their Bitcoin. Somebody else has a different perspective on that. That was a weird glitch. And then you got some other ticker symbols. Now, one of the ticker symbols that I really wanted to cover today was going to be VRT. VRT is a stock that I've heard from a lot of you guys. And I'm always saying that one of the biggest indicators or growth indicators we have are going to be here, right? So some of the biggest indicators will be in StockMate. People that are commenting and sharing their different companies. There's some wins there Kate made with TSL. And a lot of the press releases, Lawrence has got some good information there as well from people that are sharing stocks inside of StockMate. And so one of the things that I wanted to go over today was this stock that's been pretty heavily shared. It's VRT, and it's called Vertiv. And I haven't really built out a market analysis framework for this one to do a good analysis. And they're already kind of at a high right now, but we're going to do a full breakdown real quick. So it's VRT stock, and we'll do some financials, and we'll also search up not their financials. Vertiv. I'm just going to search company. Here we are. All right. So when it comes to the financials, they're a data center company, and they have income statements that are showing signs of pretty good growth. You see revenues at about 1.6 billion, then 1.95, 2 billion, 2.3, 2.04 billions of dollars in revenue, and their annual revenues have been increasing steadily. So financials there look really good. Net income is up, as well as their net profit margins there, sinking just a tad, but balance sheet over here, it looks good as well. See the total assets up and increasing more than their liabilities. So market cap's about 54 billion. So they're already up there, which makes sense given all their revenue. But one of the things we're considering is that they are a player here in maybe not data centers, but very complex building of data centers that is in all industries, from colocation to federal to healthcare to manufacturing to retail. And it says Polar and Vertiv drive innovation with modular AI solutions for their DRA01 data center in Norway. So internationally, they're building data centers. They have this cool chip, which is designed to remove barriers to liquid cooling in an air-cooled environment, and it is liquid to air heat exchanger for direct-to-chip cooling applications that offers easy and cost-effective deployments in any that doesn't finish. So this is really interesting because, they're kind of doing what Super Microcomputer does, which is provide the housing inside, but they do it in a way that are like, look, we're doing it and it will cool your chip down. It will cool your chips down for you. And so they're basically a solution for data centers to improve the efficiency of the data centers with these cooling modules. So we're going to continue to watch some of their solutions. They are seeming to get a fair amount of momentum as of recently. One thing to note about their financials, they're making that money, which they are increasing to 8 billion in 2024 and most likely going to see more growth, is that their market cap is still up there. The PE ratio isn't the most favorable. It's about 82. Usually, by the rules of Warren Buffett, we look for a PE ratio of about 20. It's like perfect, right? But that's okay. Other than that, I like the company's growth. Seems like they're going to continue to grow in the long term as they're in the right markets. So when it comes to their stock, again, we kind of just talked about that PE ratio, but it's possible they're kind of at a resistance right now, something like this. Kind of see that kind of trend, and maybe it sells back down or gets down that 200-day moving average. If they were in this $95 to $100 range, it'd probably be a lot more attractive. However, things could change and they could continue to run if, for example, when the earnings come out, like we were just talking about here, we'll head back over to exciting earnings. And the earnings are on Wednesday, pre-market. So we'll watch there. So I see Miura says, what do you think about Riot stock? So Riot is reporting earnings as well this week on after hours on Thursday. So we'll be watching there. When it comes to Riot stock, I'm not extremely familiar. We could search it up. So they're a video game company, Leagues of Legends. Are they or are they not also building? I thought for some reason they were building or this is different. This is a different Riot. Okay, this is a different, not Riot Games. Talking about Riot as in Riot here, RIOT, not the video game. But I was thinking Riot might be interesting because they were building, I thought they were building, which company is it that's working on Grand Theft Auto, the new one anyway? That's going to be crazy. But this is a different Riot, and they're building the world's leading Bitcoin-driven infrastructure platform. So they do Bitcoin mining, as you can see. They do ESS Metron. They do Leading the Way. Riot Platforms owns and operates North America's largest Bitcoin mining facilities as measured by developed capacity. You can see that set up there. So one of the things that we're kind of watching with Bitcoin mining is, you're investing in basically what could be a company that's accumulating Bitcoin. So when it comes to your, investing, do you want to invest in something that's maybe tied to Bitcoin, or do you want to just own Bitcoin? And I usually tell people just own Bitcoin because it's more certain, because you can control more of the control of it, and you know that you're holding it. So if you're looking at Bitcoin mining, personally, I would buy Bitcoin. So maybe I'm not the one to ask. A good kind of example, I guess, that hit hard was like, would you rather own a picture of the moon that could be worth money on the marketplace, or would you rather own or actually see the moon and be able to see the moon? And most people would say, yeah, I'd rather just, have a clear view of the moon than a picture of the moon. It's kind of like here, it's like you're buying a company that's Bitcoin mining, and they take their money, they probably sell their shares so that they could build more things to acquire more Bitcoin. And who knows how they steward that money. So that's why I say stay away from crypto mining companies as far as stocks. Maybe that's a contrarian take and people don't like that, because I know a lot of people like Bitcoin mining companies, but that's just how I see it. So hopefully that's helpful for you. And then Crazy Carl says, let's go, Crazy Carl. Let's go, man. Happy to see you in here. Now, the other one we had going, so we went over SoFi, we kind of went over BigBear.ai today, Tesla as well. We were watching the Robotaxi launch along with their shift towards AI, I think is really big for them. That's going to be a good one. Someone says, I agree, the Bitcoin mining doesn't really make a lot of sense if you're just, buy Bitcoin. I kind of get that. So the other one, John says, Applied Digital announced that the first 100 megawatt data center for CoreWeave is slated to be operational by the fourth quarter of 2025. Revised forecast coming on Wednesday? We shall see. It's a good question, John. So those are kind of the companies we're watching. The other one that Theodore would like us to take a look at is Serve Robotics. We could take a look at that. So Serve Robotics, we're going to go over to our robotics watch list. Think they should be there. They're not there. Yeah, they are. They are there. Serve Robotics. Serve Robotics has seen a lot of growth and some spikes. We started covering them back in January, I want to say. Was it? Right around here, we started covering them. One of the things that really tanked their stock, was right back here around February, is that they had an announcement with NVIDIA that they were no longer working with the NVIDIA or something like that. So we take a look at their financials there. You can also take a look at Serve Robotics. So let's take a look at their company. We'll go straight and direct to their investor relations. So some of the news they've come out. Serve Robotics brings autonomous robot delivery to Atlanta with Uber Eats, Shake Shack, and local favorites. Serve Robotics is operating in the Bay Area. I saw them in Miami when I was visiting. They do sidewalk delivery. They have these little robots, and they're like these why deliver 2-pound burritos in 2-ton cars? I love it. I think that's really cool, actually. There's the little robot. I actually have a video of it. I've seen it in person. And so that's a real world usage. Like, first thing, the market, delivery, huge market. Second thing is, the real, so you have the cash. A lot of people investing into things like Uber, Uber Eats and DoorDash are used all the time. A lot of people have been using, for example, their bikes to deliver or scooters because it's more efficient. This company says, we'll do it efficient and we'll do it automated. So they come out with this robot here and they're delivering food in the cities from places direct to different homes and apartment buildings. And so I've seen it firsthand. So that's the second part of the market. It's actually real world. I've seen it. Does it change the way that you chew gum? Maybe. I remember watching it and I was actually sitting at a light as it was waiting for the light to go. And I was also waiting and we were just kind of sitting next to each other. I wish I could pull it up, but we're live right now. I have to find that video. So they have NVIDIA chips in them. That's what LA Fanatic says. I think that's right. And it looks like they're still partnered with NVIDIA. They still say that. There was some news that said they weren't, but I guess they are. Uber Eats, 7-Eleven, making delivery affordable. You can see the robot there. And Uber Eats, they're one of the partners. And as seen on, you see where they're at. So they're in a really good market and they're starting to grow. Then we take a look at their actual stock. I don't think they're reporting earnings this week, but let's just double check here. Serve Robotics. Don't see them, and I don't think they're reporting earnings. They are not. But let's take a look at their financials. Market cap under $1 billion at $650 million. They are having negative net incomes. So investing a lot in the company and having negative net income of about $13 million. It's not crazy, but it's kind of like stupid low for a company that's at the market cap that they're at. But it's kind of exciting at the same time because they have a lot of investments from big companies like Uber and NVIDIA, and their total assets are at $216 million in cash with only $6 million in liabilities, which is really healthy. Really, really nice balance sheet as you see it increasing there year over year and quarterly by hundreds of millions of dollars. And then again, so their net income might be negative 13 million, but if they have one quarter where they get up into the 10, $20 million in revenue, they're immediately, positive. And with the cash that they've got along with the market positioning, they could potentially be in a really nice place for developing these robots and serving different parts of the country and most likely wanting to expand out into some other countries, I would imagine. And it's in LA. I think it's in Miami. I thought I saw it in Miami as well. It was a robot. That was the only thing. It didn't say serve robotics on the side, but I don't think this one does either. I think it just says on delivery or something. So that's okay. Anyway, can it hit $10 a share? I mean, market cap opportunity is definitely like $10 to $20 billion market cap opportunity. Right now, it's about 600 million. If we see it get up into $1 billion again, we'd see a move up here, $21 a share, about 82% margin for profit. Pretty high risk, as I mentioned. They're lower market cap, and they also have what could be really good financials, but their balance sheet's good, but they haven't seen it really nice on their net income. So they're volatile, could see them sell down, but with NVIDIA backing them, and honestly, I see the market that they're in as a really potentially great market. That recovery up into that $82 a share can make sense. One thing to note, there is a pretty strong level of support that we saw get mapped out earlier when we were starting to cover it. It's kind of a resistance and a support level right here. You can actually move it down a little bit. See that level right there, resistance, support, some consolidation there where it dropped below. It's kind of in this range, and then it acted as a resistance and has acted as resistance around $15. So the next target, I guess, for Serve Robotics, really probably a little more conservative stop as it just is pushing above that 200-day moving average, so a little bit bullish, but you see it now getting back up into these levels, offering maybe what could be a near-term margin for profit of about 28% margins. It's a pretty nice margin for profit, 30% potential if you see that resistance get reached again. And then you do have a support level pretty close to it. Previous resistance right here, some consolidation support down here. probably where I'd set my stop, somewhere around $10.70 there. Why we'd look at it, really good market. When we trade it, probably would be in a dip at market open. That's normally when the biggest dips happen on this stock. Kind of take a step back and see, let's see how it normally reacts. Let's see. Yeah, so like right here, for example, this is a day trade or a couple day long trade that potentially would make sense. Right here is market open, so 6:30 a.m. This is when we go live every day, Monday through Friday, inside StockMate. It sold down and sold down all the way until just about 7 a.m., which is sometimes we wait as long as 7:15 for moves to play out. And then after that distribution, we see a nice accumulation stage. From the accumulation stage, really in the next day it was 5%, but over the next few days, 2 or 3 days, we see it go up about 13%. And since then, it's gone up really over the last week, it's up about 7%. But it's kind of looking to get back into that level, $12 a share. So again, about 15% margin from entry if you enter. That's why we look at that market open. And then when it comes down to this, just kind of timing that entry, but also having a plan together is important. Looks like maybe that next margin is about 6%. It's kind of how it looks. So again, I really do appreciate you all. I hope that you have a great day and that you enjoy the rest of your Friday. Aaron says, Serve sounds interesting. I do think it is an interesting play. Potentially we'll play some more with Serve. And I hope that you guys have a great rest of your evening. Chris says, can BigBear.ai hit $10 a share? It absolutely can. Whether or not it will, that is another question. I think it most likely at some point will hit $10. It's already hit $10 before, earlier this year, actually. And we got some breakdowns for BigBear.ai. In fact, I just did a video, I think it was earlier today. Was it? Yep. About a potential deal that we saw with Big Bear that was really interesting. I mean, basically, there's a bunch of articles that come out that say there's a $5.5 billion deal with TSA. There's a lot of articles. Here's another article. Here's another article. Quite a few articles. And but then we go to the actual .gov of that and kind of take a look at what the .gov looks like. And it was legitimate that they had that something like that, but here's the .gov article, if I'm not mistaken, from the Department of Homeland Security for Big Bear. They say that they are looking for a contract like this, but they don't say it's 5.5 billion. That's the only thing. But they're looking for a screening partnership and someone that can do biometrics and AI technology, which in this case would be all of these airports that are already trusting Big Bear, potentially having this biometrics tech impact them with the ability to be able to secure that contract. It's definitely a possibility. And is the breakdown. Hopefully you got value. It seems like we had to answer a lot of companies, a lot of different ticker symbols today. I hope you guys have a good rest of your day. And again, if you want to join us in our daily live trading, it's the second link below. Outside of that, we've been using Mercatus quite often. This is a predictive analysis software. And right now we're using the OpenAI GPT Pro model. It's $200 a month for the GPT Pro model if you go directly to OpenAI. But we're adding OpenAI, Grok, Claude, and many more at a fraction of the cost. If you want to have the ability to unlock this, we're doing a full reveal on Thursday. It's the first link in the description to join the first access list. So again, the first link in the description for first access list. And if you want to join us in our daily live trading sessions, as well as unlock how to trade, fundamentals, the technical analysis that I run through, all of those things, you can learn it pretty easily inside of StockMates. And that's the second link in the description down below. I appreciate you all. I hope you have a great rest of your day again. And do smash that like button if I earned it. Do consider subscribing, and I'll see you in the next one. Thanks for tuning in, guys. Thanks, Ken. Thanks, Yaba. Thanks, Marty, Aaron, LA. Thanks, Chris. Thanks, Crazy Carl, Thomas, Miora. Appreciate you all. Appreciate you all. Thanks so much, Adrian, Gary, Bequetter. It's funny. That's a funny username. I just picture like a duck. I just went whitewater rafting yesterday near Folsom Lake off the American River in California. And I saw a ton of ducks. So beak wetter makes me think of that. Marty, thanks for tuning in. Corey, thanks for tuning in. Corey's asking about QUBT. I wouldn't invest in it. Robin, good morning. And the reason why, Corey, is just the financials. The income's been super negative for the most part. That's why. And they've had a lot of manipulation on that stock. And thanks so much, Agua, Tanet. Appreciate you all. Hopefully you guys have a good one. Thanks so much. See you in the next one. Take care now.